Hi everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be talking about Lululemon, ticker symbol LULU. Today we're going to talk about Q1 2021 results. We're going to look at the stock price history, look at shares outstanding, look at the fundamentals of Lululemon, and finally I'm going to give my thoughts on it as an investment. If you're new to my channel, please consider subscribing. It helps me out a ton. I do videos on personal finance and stock analysis. Also, like the video at any time. It helps me out a lot as well with the algorithm. So thanks so much. Enjoy the content. So Lululemon announced their Q1 2021 results today. The analyst had their earnings per share estimate at 91 cents per share, and they reported a diluted earnings per share of $1.11. That's a beat of 20 cents per share. So really good hit there. That's above 20% beat. Really good job. Their adjusted earnings per share was a little bit higher at $1.16. That would be about a 27% beat off of the earnings per share estimate from the analyst. On the revenue side, they report the analyst had them at $1.13 billion, and they reported $1.2 billion, or a beat of about $70 million, about a 6% beat. All right, so let's dive into the results press release. So right off the bat, they said it had a revenue increase of 88% to $1.2 billion. When I check that off of their annual, sorry, I go over here to quarterly, go of May of 2020, 917 million. I don't see where they got 88%. I think it's more like 30% because there's 1.2 over, yeah, so about 300. So about 30% increase that I calculate. So I don't know how they're getting 88% revenue increase from even the prior quarter. If we look at revenue from the previous quarter, that was at 2.2 billion. So I'm not sure where they're getting that number from, but it's interesting. Definitely not what I'm seeing on the on my side here. So if we scroll down through here, we can see that they did fairly well. I mean, all their numbers look really great. Really good operating margin. Gross profits is up really well. 700 million gross margin increased to 57.1%. So that's really great. 57.1% margin. That's awesome. That's a huge that's a huge increase in earnings per share from $1.11 compared to 22 cents in the first quarter of 2020. I think a lot of numbers were probably suppressed for 2020, but it is definitely 5 times, close to 5 times, if not more, in earnings per share. What I really wanted to go down here is down to the 2021 outlook. So if we look at, let's see, for Q2, they're looking at $1.05 to $1.10 for their earnings, diluted down to $1.10, $1.15. If we go over to their earnings per share, all right, yeah, if we go down to their earnings per share here, we'll see that their earnings per share back in May was 30 cents. We look at the previous year before that, it was 99 cents. So yeah, they had a pretty bad May last year. But yeah, if we look that in line with the year prior in 2019, which I've been doing with some of my other companies, it's still a 20% increase from 2 years ago. So a little, year over year, about 10%. 10% from here to here, if you just strike May 2020 out as an anomaly. And then it looks like in November of 2020, they actually had some growth year over year. So it looks like at this point, they've had a full recovery, and their EPS is back to where it was after November of 2020. It looks like they've been this is their 3rd quarter of solid back to growth. So that's really good to see there. Going back to the earnings, we see that expect net revenue to be in the range of 5.8 billion to 5.9 billion. Going back over here into the numbers, let me go to revenue for the year. For the full fiscal year, they had 5.8 or $5.6 billion. And what were they estimated again? 5.8, 5.9. It's not, let me see. Let's see. I'm not great with quick math, but it's 5.9 on the high side. Minus, let's see, what is that? 5.6, 5.63 over 0.63. So about a 5% increase in revenue they're anticipating for the full fiscal year. I'm a little surprised by that. It looks like here, and that might be why the stock was down today. It's interesting because if you're looking at the revenue, over the last 7 years, 6 years, they've had over 10% growth year over year. So that would be the first year that they've had growth under 10% since they've been a public company, or at least what I'm looking at here on my chart. So that could be a reason for some suppression, a little decreased growth, what they're estimating here. So that's definitely something you're going to want to look at and pay attention to see if that is really going to decrease their, if that outlook is a decrease in growth, that's definitely going to be concerning, as their multiple is fairly high, and we'll look at that a little bit later as well. Hey, you're still here. Please like the video. It helps me out a lot with the algorithm. Now back to the content. All right, looking at Lululemon's stock price, it closed at $317.36 today. Let's look over the last 6 months. They're down about 15%. Over the last year, they're about break even. They haven't really made you any money over the last year. We're bringing that out to the 5-year range. You've been up about 350%. Down in the COVID lows, they were trading for about 165. So you would have roughly doubled your money, about 100%, if you would have bought in at the low. Even if you held it pre-pandemic, you're still up a good, what is that, 24, over 20, near 25% there. So you're sitting pretty happy right now. If you had Lululemon before, you're still doing fairly well as a return. I think the thing you need to pay attention to as an investor is that growth we looked at earlier. So moving on, let's look at Lululemon's shares outstanding over the last several years. So since 2017, they started out with 137 million shares outstanding. They've paid that off, fairly slightly, about 2 million a year, and they're about down to 130. I think that works out to about 1.5–2% a year, and about 1.5 of buybacks a year. And it pretty much looks like it was suspended, and that's to be expected as the pandemic pretty much caused most companies to stop with their buybacks. So nothing concerned here. Good to see that the trend, even though it's slight, is negative. They're definitely buying back shares. They're not issuing more shares. I hate to see when companies issue shares and they're not using it for good purposes. But here, from a dilution standpoint, this is a good thing for investors. All right, now let's look at the revenue. Let's move into fundamentals. Let's look at what Lululemon's been able to do throughout the years. So if we look at their growth, I alluded to this earlier, is that they've had double-digit growth over the last 6–7 years. And that's been really good for them. If we look at their price to earnings over the last several years, they've gone over 30, and they've been in the 40s the last couple years. And currently, it says they're trading at 70 times earnings, which seems to be surprising. So I would ignore this one. It's probably more like this, more in the 40 range. So, but I'll have to check that out. This revenue growth is quite substantial. As I mentioned earlier, this is something you're really going to need to pay attention to, because that multiple is definitely going to take a hit if revenue growth slows down. Looking at gross margin, from that press release, their gross margin in the first quarter was, I think, 57%. So that's really good. That's highest gross margin they've had in the last, since everything that we're looking on here. So that's good, really great to see. That should reflect down in the bottom line and net income margin, but we'll have to pay attention to that later. If we go over to our statement of cash flows, I want to look at cash from operations minus capital expenditures, which will give us free cash flow. So if we go over here and we look at the end of January, what we want to see is an increase of cash flows year over year. If we go over here, we'll see that this is about 700 million in 2021. There's about 450 in am I doing my math right here? That's about 500 in 2020. We have 600 something here, 670 there, 400 here, 300. So 300, 400. Yeah, it looks like fairly they're increasing their cash flows. That's really positive to see. I like seeing that. The other thing I want to look at is their balance sheet. I want to look at total. I want to look at their total cash and short-term investments to see how much cash they have on hand. Cash and cash equivalents, $1.47 billion. And if we go down to their current liabilities, they have 1.13. So they're able to cover all their liabilities with their cash and cash equivalents. So that's really good to see. So if there was COVID-2 or any other unforeseen activity, they could definitely have the liquidity to cover themselves and not have to worry about bankruptcy there. The other thing I just thought was interesting, they only have $2 billion worth of total liabilities, and a lot of that is lease obligations, which I think these are good. This is where their stores are at. I mean, I don't think that's bad debt. This is a income generating debt here. So overall, I think that's a total positive for Lululemon. Overall, it looks like Lululemon did fairly well in their quarter. They beat out by expectations on earnings per share as well as revenue. The thing that stood out to me the most, and is probably what's causing any price fluctuation at all, would definitely be that it seemed like their estimates for 2021 were indicating that they were estimating lower than double-digit growth for the year, which historically has not been the case. They've been having double-digit growth for the last 7 years, which again, a slowing growth would definitely cause the price to slow down in how much it's worth in terms of a multiple. So that's something you really need to take into consideration as an investor. We'll want to monitor that into future quarters to see if that guidance has changed, or if we see that growth, that 5% that we were estimating for the year, to play out. Because if it does, you need to make some decisions as an investor on what you would like to do with the name. So thanks so much for watching today. Frank Finance, out.